Welcome to the Wise Wolf Project. I'm your host, Wise Wolf. It is again December 31st, 2010, on the cusp of the new year. In front of you should be, there's the creature from Jekyll Island picture of the book cover. I actually finished reading the book a couple of weeks ago, I believe, and within it, there's a lot of interesting things, especially if you want to know anything about the Federal Reserve and how our money system is set up. This is the book to go to. This is the book to read. I forget which chapter this is, but it's the Under the Great Duck Dinner on page 498. Griffin, the author of the book, he cites Montague Norman, who at the time was the head of the Bank of England. He was on his way back from the U.S., on his way back to London, where a group of students, recognized him, and he was going under the alias Mr. Skinner, as not to give away his identity. And he told them, quote, "In the next few months, there's going to be a shakeout, but don't worry, it won't last for long," unquote. And then it goes on to say, on August 9th, the Federal Reserve Board reversed its easy credit policy and raised the discount rate to 6%. A few days later, the Bank of England raised its rate also. On the next page, then on Thursday, October 24th, like a giant school of fish suddenly turned direction in response to an unseen signal, thousands of investors stampeded to sell. Further down, the insiders who had moved their investments into cash and gold were the buyers. Those who had the cash picked them up for a small fraction of their true worth. Now, I found it interesting because in February of 1929, the Fed already knew that the market was going to collapse, and they forewarned their preferred customers. So people that they were close to, people that they liked, they told them, "Hey, this is going down." So the Fed knew, and the people who were close to the Fed knew, and most of them were people of power, political power, people who had a lot of money, blah, blah, blah. In August of that same year, the Fed increased its bank loan rate and sold Treasury bonds and securities. And it wasn't until October of 1929 that the stock market actually collapsed. And this took about 8 months, from February, when the Fed knew, to telling their preferred customers about it, to the time that the October stock market crash occurred. Took about 8 months. Not a month ago, but a few months ago, Tony Robbins, who's very known motivational speaker, what have you, basically gave a dire, kind of somber prediction that he had heard from one of his clients or customers who was well-to-do, had a lot of money, said that he was pulling his money out, and they were expecting something major decline in the stock market, major decline. So I figured, I just wanted to do like a little healthy exercise, since this whole thing is being compared to the Great Depression. It hasn't been this bad since the Great Depression, blah, blah, blah. I wonder if it would take just as long for the market to crash as it did then, which is 8 months. And I believe Tony Robbins' video was in like late August, mid to late August, which would mean 8 months from there would put you around February, March time frame. So just a little exercise. Not saying anything's going to happen. I don't know. But just want to see if in that time frame, the February, March time frame, we actually have a major stock market breakdown. Wouldn't that be interesting if that happened? Remember, the invisible is more powerful than the visible. Think about it.